European equities are higher this morning on this idea that we have a 2-week hiatus in terms of US military action. And I'm just wondering how believable that is and why we're seeing risk on this morning, going into a weekend that could produce God knows what.
We are seeing risk on, Guy, but it's pretty marginal. I think it needs to be looked at the last kind of couple of weeks in a slightly bigger context. What's amazing is that we've had this massive kind of unprecedented level of Middle Eastern conflict, and with this big spike in oil prices, about 20% higher since middle of last week, despite the fact they're slightly lower overnight. And yet most markets around the world have gone net nowhere in June, and that's after a crazy year. But whether it's major stock markets or it's major FX markets or even bond markets, all of them are relatively stable overall. And I think that gets the picture that we're generally drifting into some kind of clarity on what's going to happen on the trade war, which is still the biggest theme of this year. And probably one of the other big themes this year is, of course, what happens on the fiscal bill as well. And both those two things have a lot of uncertainty, but we should get much more certainty on what the next stage of them is in the next 2 weeks alone. So these are markets that are kind of drifting. Sure, we're a little bit risk on today because a fear of a US intervention on the weekend has now been more likely to be postponed. I agree with you that it's not definite, and therefore it's marginally risk on, but it's not an exciting move.
Mark, we're still looking at a almost 77 handle on Brent crude right now, even though, to your point, there isn't that much excitement, at least in the broader cross-asset picture. European futures showing something different. If you're a macro tourist looking for some yield, you have the ability to navigate the volatility, why not hop into some oil contracts right now?
I think because if, as a macro tourist, these are not the times to be kind of trading it, because it's where the specialists make more money. You don't know where the vulnerability is. You don't know where the position squeezes are. Macro tourists kind of getting beyond their wheelhouse is always dangerous at the best times. I know when I've tried trading commodities beyond gold, I've lost money. I once tried trading wheat contracts and it was the most foolish thing in the world. So I think particularly at this time, macro tourists aren't going to get involved. This is a time for the oil specialists, and they will be taking advantage of the curve play, of the opportunities, but it's not going to be a massive arbitrage opportunity for other tourists.
My optician told me he made lots of money of a bit of speculative oil trading, but that's by the by. Mark, just looking at the moves we've had in oil this week, it's really in a range. I wonder what gets us out of the range. Does it take, the Strait of Hormuz being blocked, which every analyst is telling us is never going to happen? Does it take US direct military involvement, which already has been shelved for another 2 weeks? What is it that moves beyond these little moves?
Well, as I said, there has been a big move in oil. Oil prices are 20% higher than just over a week ago. Nothing else is moving. As for what gets oil higher from here, I think it's going to be tough. It's going to take some really extreme scenarios. The backdrop is we've just got a lot of supply that's waiting to come through at higher prices, not just from OPEC, but including from the US side as well. So I think oil's already in a higher range, and I think the world's kind of going, this won't sustain. Ultimately, it will come lower because all the supply is just waiting to come into the market, and that's why the rest of markets aren't reacting.